Let's stay with the markets now, because our guest this morning is Ali Dibadj. He's the Global Chief Executive Officer of Janus Henderson, the investment company with, as of the end of last year, $379 billion, with a B, billion dollars in assets under management. Ali, good morning. Thanks for being with us.
Thanks, Richard. Thanks for having me.
So much to get to this morning, but let's start with your trip to the Middle East at the moment. You have had an office in Dubai for more than a decade, recently opened in Abu Dhabi. Last year, you bought a Kuwaiti company that's headquartered in DIFC, and reports this week suggest you're looking at Saudi Arabia. Why is the Middle East so much on your radar?
Well, we love the Middle East and the growth opportunities that are here. We see it from many different angles. First off, our client base here is extraordinarily robust. We have north of 50 clients around the region. Some are the most sophisticated sovereign wealth funds and family offices there are right there in the region. And so we enjoy serving them. We enjoy delivering for what their needs are, and they have very, very sophisticated needs that Janus Henderson can deliver for them. So we like the client base that they have right now, but we see tremendous growth in terms of entrepreneurialism, tremendous growth in terms of new ideas being brought to bear without as many restrictions as around the world. So we feel that the region is going to be a fast-growing region. We want to be part of it.
Tell us about that acquisition that you did last year, a company that was part of NBK, National Bank of Kuwait. Not an obvious fit for a massive multinational fund manager, but tell us about that deal and why you did it.
Yeah, it's a great question. It actually was an obvious fit for our strategy. Look, our strategy is very much being client-led, looking to what our clients need and delivering that for them in all sorts of different shapes and sizes. And what we found in the region, and again, a region we are very optimistic about, we're seeing a lot of growth short-term and long-term, is that our clients were saying, listen, we're giving money to globalize. We're giving money away from the region. It'd be great to invest in some of the entrepreneurs and local opportunities that exist. We made a search, we looked around, and we had a great relationship with NBK. And what we found was a fantastic team that's been local for the past 2 decades almost, part of NBK Capital and NBK Wealth. And they were the captive investment arm for privates in the region. Really phenomenal track record from an investment performance perspective. They did extraordinarily well. And frankly, culturally, it was a great fit. They are people who are very dedicated on their clients, very dedicated on delivering great returns, and importantly, very dedicated on the region, very dedicated on supporting the infrastructure that is growing here. This is a startup culture.
Let's talk about the financial centres here, Dubai being the one that you set up in more than a decade ago. Janus Henderson, based in London and Denver, following the merger a few years ago. You're based in New York, established financial centres, and yet Dubai, Abu Dhabi, and to a lesser extent Riyadh seem to be sucking in not just capital, but also talent at the moment. What's your take on that migration?
Yeah, so look, to your point, Janus Henderson is headquartered in the UK. It's got a very large office in Denver as well. To your point, I guess I'm more based on a plane than I am in New York these days, given our 25 offices around the world. But we see where their opportunity is. We see where we can serve clients. And this region, not just from the entrepreneurial environment that we're able to bring in our NBK Capital team, now called the Janus Henderson MENA investment team, not just for that, but from a global perspective, we find, again, as I mentioned a second ago, the most sophisticated clients here. We love delivering for sophisticated clients. We ourselves are so bottom-up analysis focused, so focused on finding really interesting investment opportunities and places that are overlooked, and to bring to a client base that's as sophisticated as here, that's as demanding as here, is how we want to win. Now, from a regional perspective, there are plenty of reasons why people come here. There's been significant migration to the region from all around the world, particularly from Europe, and many things apply. I mean, certainly there's some immutables, like the weather is quite good relative to many places around the world, but also there's stability. There's opportunity to try different things. There's a very vibrant, as I was saying a second ago, startup and entrepreneurial culture. There's great safety. There's great stability. A lot of things that are attractive for people to come here. And so we see that. We're seeing that from our own people around the world, looking at this region as a place perhaps to set up tent and stay here. We think there is continued growth in the region from a talent perspective, but very importantly also from a client perspective. And we're always going to be client-led in what we do. You mentioned our offices that we've opened so far. We are looking for other offices. I am very ROI focused when we open offices, and we see a lot of ROI potentially in this region.
Let's talk about where to invest at the moment. You guys have 3 themes at the moment. Inevitably, geopolitics is one of them. Tell us briefly what those 3 themes are and why you think they're going to drive investment returns over the coming years, if not decades?
Yeah, I think it is decades. Some of these, again, are sort of immutable in the way we look at things, and they affect how we invest. And it's the complexity of the environment that you all were talking about earlier today that will continue to happen. So the three themes are, number one, geopolitical realignment. This is not a new theme for us. It's a theme we've been talking about for at least 2 or 3 years. We see that actually playing out. Now, we all talk about the election cycle that happened last year. Half the world's population went through an election, and that's all well and good. But just now are those new governments putting in administrative rules, or putting in legislation, or actually changing what they're doing. That's happening now. So we're watching that very carefully. We see two major investment themes coming out of that. One is very much around supply chains. Supply chains are changing. They're breaking down. Redundancies in supply chains have to happen for companies. So when we invest in companies, we look at the redundancy of the supply chain. We look at, is there CapEx has to be put in, where the CapEx can be put in. So if you're investing in small and medium-sized companies, if you're investing in REITs and property, you have to think about all that. Another element of geopolitical changes that are happening are using politics as an investment lever. You absolutely have to look at countries and companies, and are they aligned from a political perspective within those regions? So the classic examples are perhaps investing in China, and is China supporting you or not? Or in this region, is the region supporting you or not from a company perspective? So we really think about that quite a bit when you invest in technology, healthcare, et cetera. Second big theme for us is demographic shifts and lifestyle changes. Now, we all know we're getting older. I'm certainly getting older. My hair is getting grayer. Perhaps you guys aren't, but I certainly am. But you're also seeing the population growth on average from a world perspective slowing. It just is. It's an immutable thing. It's pretty easy to predict. And in fact, pick a number. We're very much long-term focused. 25, 30 years from now, population growth may actually be shrinking. So the population may shrink. I'm an old portfolio manager. I'm an old analyst. I used to put discounted cash flows together. I'm sure many people who are listening do discounted cash flows. Your terminal value would always have a growth rate associated to population. Well, that could change. Growth rate may not be positive as you average out your terminal value on your valuation of a company. That's a very big deal. What does that mean? Well, that means that different regions will do better than others. Some regions will be growing populations, some regions will not. Some will have growth, some will not. We really have to think through that and think carefully about that. Now, the other element of that is because people are getting older, healthcare needs will be very different. So we have a very strong healthcare franchise. Actually, it's locally placed and ESCA approved. Global Life Sciences is what it's called, and we have very, very strong views about the confluence of both demographic shifts and also technology shifts impacting healthcare, both from a services perspective as well as a drug development perspective. Technology as well is quite important for us more broadly. So again, among the demographic piece, there are lots of interesting opportunities to invest in. We have our Global Life Sciences Fund as well as a Global Technology Fund available locally as well.
We're talking through your three very long-term investment themes. We've done two of them, geopolitics. Number two was demographics and the aging population. The third one, and I read a quote from you that I wrote down and said, investors now have to separate the wheat from the chaff. Tell us about your third theme and how it plays out.
So yes, look, the third theme is very much around there being a cost of capital now. For a decade or more, very, very recently, there was no cost of cash. If you're a good company or a bad company, you can always go to the bank and get money and make payroll. So the performance of a good company versus a bad company was very, very similar. It didn't really pay to have, like we do, 340 people from around the world at Janus Henderson trying to select the wheat from the chaff, trying to select a good company for a bad company. You could effectively just wait for the tide to lift all boats. That's no longer the case. There is a cost of capital now. There is an interest rate now. So going to the bank costs you something to get money. Trying to get funding costs you something. So a good company, a bad company will have very differential performance. Alpha, as they say, will be created between picking a good company and picking a bad company. And again, that's what we do. Now, that has enormous implications as you invest in technology companies and life sciences companies and small mid-cap companies and large cap companies on the equity side. But of course, it has impact on the fixed income side as well. You know, there's a very long time there when there was no cost of capital, there was no yield. That fixed income was kind of irrelevant. It didn't really provide diversification. It didn't really provide yield at all. Maybe sometimes you had it for regulatory reasons if you're an insurance company or something of that ilk, but fixed income didn't have a purpose. Now it does. Now it does both in the public markets, and we believe typical corporate fixed income is quite attractive, but we believe securitized is even more attractive particularly on the securitized CLO areas, someplace we're very, very strong at Janus Henderson. We think within that, private credit is quite exciting. We have our own private credit global mandates with a company we purchased called Victory Park Capital, does asset-backed. But as you mentioned earlier in this discussion, we're very excited about the local investment opportunities in private credit. That's why we brought on board this team, formerly at NBK Capital. We call it the Janus Henderson Emerging Market Privates team, GEMPI. GEMPI is one that we really think has a lot of potential because it lends to the entrepreneurial environment in this region, in the GCC, where the banking of infrastructure isn't quite as robust to be able to do that. And that's what we provide.
Okay, so to play devil's advocate and challenge that, you say that in rising cost of capital, you need to separate the wheat from the chaff. So analysts and fund managers such as Janus Henderson, but you guys are expensive. Versus a S&P 500 tracker fund from Vanguard, your fees will always be more. And you've seen the stats about what percentage of fund managers beat or fail to beat the market. 85, 90, 95% of fund managers in the long term fail to beat the market. How do you respond to that? What's your take on that?
Well, it's a very difficult industry for sure. It's a very fragmented industry. The good news is that we have, as you mentioned, almost $400 billion of assets under management. And if you look over a 3, 5, 10-year period, we're up towards the 70, 80% of our AUM beating the benchmark. That's what we do for a living. That's our focus. We're very fundamentally focused. So you're exactly right. Many asset managers don't outperform. We happen to, for the most part, over long periods of time. And that's what we're dedicated to. And we do that because of our clients. We do that to deliver for our clients. And that's why we continue to hope to grow, and particularly continue to hope to grow in this region as, again, the sophisticated client base sees performance, sees client service, sees new products like this Janus Henderson Emerging Market products, or our Global Life Sciences Fund, our REIT funds, our technology funds that you can get here in the region.
Finally, Ali, let's talk about you and your career. You joined Janus Henderson a couple of years ago as CEO. You had a long career in finance, studied at Harvard early on in your career. The FT said when you joined, this is a quote from them, Ali Dibadj faced problems galore at Janus Henderson a few years after the merger. What were those problems, and how are you turning it around?
Yeah, the good news is we had a great foundation at Janus Henderson, and really that had two elements to it. One is this investment acumen I was talking about. The performance was very good. We've improved it, but it was very, very good, outperforming the benchmarks for the vast majority of what we do, and now it's even better, as I mentioned. What we hadn't done, though, is within those areas of strength, we hadn't brought those to clients as much as we should have. So we hadn't tied in the investment acumen with the marketing and client service that we provide. We're very good at client service. If you're a client of ours, you actually love us. We do this from NPS scores and other things. You love us. We just don't have enough clients. We have, as I said a second ago, over 50 clients in the region. We should have double or triple that, given the prowess that we have from an investment performance perspective and a client service perspective. So to your core question, the big problem was making the firm not work in silos anymore, making the firm work together, making the investment teams know and think through what clients' needs are through the client service that we have, and picking those teams to work in unison. That's what we're doing. Step by step, we're getting there. We have certainly improved our flow picture, which is effectively clients voting with their feet, so to speak, or their pocketbooks. And we hope to continue to do that. And our focus on this region is part of that growth trajectory for us. We believe there's a lot of opportunity here. We want to be one of the major investment houses in the region. And we think that we can do that given the investment acumen and the client service that we have at Janus Henderson.
Finally, Ali, work-life balance. I've read various things. You're based in New York. 1, you eat a Cobb salad every day. 2, you get up at 7 o'clock in the morning, whichever your hotel you're in, to exercise, and you've done that here in Dubai. And 3, you always get home to New York on Friday nights for movie night with your kids. How do you juggle that?
Well, not very well. I will say I haven't had a Cobb salad in a few days. It's been challenging to find one sometimes.
Okay, restaurateurs, Cobb salad, please.
Cobb salad would be great. I did work out, but I'm not doing it as much as I should. And I missed one Friday night so far this year, and that was last Friday when I was here. I've been here for 2 weeks round. I hope my children forgive me. I love them very much if they're listening, and hopefully I'll get to catch up on that schedule soon.
But you did go for a run yesterday morning in Dubai.
I did, yes, about a 4-mile run. It was great. The weather was fantastic. It got dark by the time I got back, but it was a great run.
Ali, it's great talking to you. Appreciate your time this morning. Thanks very much indeed for making half an hour for us on what is a very busy trip to the Middle East. The thoughts there of Ali Dibadj. He's the global CEO of Janus Henderson, the international fund manager. You are listening to The Business Breakfast, Dubai Eye 103.8 FM.
Dubai Eye 103.8.
Join the conversation.